Hey gang, welcome to another SPAC investor presentation. The only show on YouTube where you get to hear a guy ramble about investor presentations for about an hour. That's how long they've been. As always, if you want me to talk about any specific SPACs, let me know in the comments down below. Thank you for all the likes and subscribes that you guys have left me. I really appreciate it. Today we are talking about lottery.com, ticker symbol TDAC. As always, a reminder, I am not a qualified investment advisor. Please talk to someone who's qualified to advise you on your money before making decisions regarding your financials. I'm just doing this as a hobby. So TDAC is a SPAC that's been around for well over a year. Honestly, they went live in June 2018, so it took them a while to find a target. They, I believe, had an extension or two even to make this happen. There were potentially some redemptions along the way. After all, who wants to wait almost 2 years to get a deal? They finally announced lottery.com around here. The rumor or announcement was there. The actual deal didn't happen until February, mid-February, where it peaked around $15, a bit over $15. So clearly, if you bought somewhere around here, you were doing pretty well. After that, we lost quite a lot in terms of SPAC valuations in the February/March SPAC crash. It's not been a good month or two to be a SPAC investor, especially if you were buying some of these SPACs that were going 20 to 30% above NAV, net asset value, without even a target. So not fun times there, but deals are still being made. Valuations are still high. The good thing about this deal is that it was made probably, or at least finalized, a while back. It just took a while for them to release a presentation because they were making some acquisitions that they wanted to include in the presentation. We'll talk about that later, but still an interesting timeline for this one. Units launched in 2018. Pardon me. They included one common share, one warrant. So there's going to be quite a bit of dilution here. Keep that in mind as we look at this presentation. But let's dive into it. So lottery.com is a interesting play, basically taking lottery tickets online. A lot of high-level executive management. You got this dude with his chin on his arm looking all fancy involved, so good for him. Some advisors that are interesting here. I like Jason Robbins, CEO of DraftKings. I do own DraftKings shares. I think it's a good company, valued for perfection, but I didn't buy it today. I bought it quite a while ago. Also a SPAC that has done very, very well for investors, really driven by some growth potential in that area. I think lottery.com is a comparable model. You're taking gambling online in a way. Don't know if it's going to be valued anywhere close to DraftKings because that business model, I think, has more uptick right now. But I think there's a lot of potential. It'll be interesting to see how lottery.com does and what their projections look like, and really how they did in 2020. So foremost brand name and premier provider of global lottery data. Let's look at lottery.com. Let's search lottery on Google and see what you get. So you get local results, Pennsylvania, lottery, the lottery, a story. So it's the fifth result when you search lottery on Google. So not bad. There's obviously a good brand there. Lottery.com is where you would think you would go to buy lottery tickets. So I like the the website itself. This is what the website looks like. I don't really know how they work, honestly. So you choose a game, you pick your numbers, you get your tickets, you collect your winnings. But are they affiliated with the state that they work with? Do they have a license to do sole online sales with those states, or are they just another authorized reseller, like a store, a gas station, except they're online? So that'll be interesting to see within the presentation whether they explain that. Enormous global market opportunity, no lie there. A lot of people play the lottery. 698 billion global total attainable market. That's reasonable, right? The lottery isn't only big in the United States, it's everywhere. A lot of people play lottery games, whether it's scratch tickets or games of chance, like picking numbers. Massive opportunities for geographic and product expansion. They're expecting 571 million 2023 revenue, which is pretty good. Diverse product offering with existing and projected strong cash flows, 59 million EBITDA in 2023. I do think this is probably a decent margin model, right? They don't probably have to do a ton besides have a website and make deals with certain states or countries to sell lottery tickets online, and then significant existing and projected revenue and EBITDA growth. So they're projecting 300% growth between 20 and 23. That's enormous. So that tells me that the starting point in 2020 must be pretty low, because that sort of growth is ridiculous and not really something you see even in SPAC presentations, which are usually hopelessly optimistic. Really, 300% annual growth is ridiculous. So our vision to be the premier global marketplace for all types of games of chance. So they're, are they thinking just lottery games or something else as well? And mission statement to deliver responsible, trusted, and transparent gaming to the world. So they're saying, hey, consumer shift to convenience is inevitable. Borders move to Amazon, taxis move to Uber, Blockbuster move to Netflix. I just saw the last Blockbuster on Netflix. Interesting dichotomy there. Grocery shopping to Instacart. I don't know if that's there yet. I still love going to the grocery store. I don't use Instacart. And now, filling out the little ticket in the gas station, moving to lottery.com. Maybe. There's an enormous global market opportunity. If you're comparing market opportunity of some of these other companies, they're saying, hey, global sports betting, where DraftKings has a 25% market share, is 85 billion. We have a 0.02% market share, and it's 400 billion. So that leads me to two questions. Why is lottery.com's market share so freaking low? Why is the uptick so low? Have they just started being a business recently? And how do they plan to grow that? What's the path from 0.2% market share to even 1% market share? Because a lot of these other companies are already well past the teens here, or at least in the mid to high single digits in the case of Airbnb, with the highest global addressable market. But lottery.com has barely scratched the surface. So what are they doing? There's digital transformation is coming. Sure. Digital sports betting is already there. A lot of that is being done online versus in person. U.S. lodging, a lot of that is being online versus in person. U.S. lottery, 6.7% is being done online versus in person. Is how much of that 6.7% is actually lottery.com business? Are there other players in this space that I don't know about? Over here it says Source Technavio lottery market in U.S. by type and platform forecast and analysis 20 to 2024. So does that mean that's the space by 2024 or by 2020? Not sure on what that means. So here's where they're present. So in 2016, 2019, New Hampshire, Texas, Minneapolis, Oregon. In 2020, they launched California, Colorado, DC, Georgia, Pennsylvania, Washington. Hey, I know. And Michigan. I miss Michigan. 2021, they're launching Ohio, and they're planning to launch Arkansas, Illinois, Kansas, North Dakota, New Jersey, New York. New Jersey, New York are good markets. A lot of gambling there, big plays. Pennsylvania, Ohio. They've got the big players there already. So Texas has been around for a couple of years. So they've been in play, at least in Texas, somewhere between 2016 and 2019. They've been in play during a COVID year in 2020 in California and Texas and Pennsylvania. They're launching in 2021 in Ohio. So they're out there already. And they're expanding, and they're planning to expand essentially across the United States where a state lottery exists eventually. So that's good to see. They are announcing an international expansion. I think this is why the deck was held off a bit. They are purchasing Agacar.com, which got 250,000 online players. They are getting Juega Lotto. So they're expanding their distribution to Mexico and Latin America, basically. Licensed to sell international games throughout Latin America, licensed to sell national lottery games in Mexico through all digital channels. In the first 12 months from launch, generated 880,000 of gross gaming revenue. Not very good, but they do have a lot of online players. They don't mention revenue here, which is a question mark. If they mentioned 880,000 here, does this mean this is less than 880,000? Right now, these don't seem like they are huge revenue plays, but obviously the opportunities there if they can move more people online, along with current distribution in large parts of sub-Saharan Africa and the recent announcement for upcoming distribution in the Ukraine and Turkey. Lottery.com plans to continue aggressive international expansion. So it seems like they're really taking this concept worldwide. Hopefully that works well for them, but it's hard to see if it will because it's so early in the transition to this online lottery space. Whereas with the online gambling space that, let's say, DraftKings is in, it's kind of further along. More people know about it. I don't know if a lot of people know about lottery.com. I know my parents play lottery games from time to time. They do not use lottery.com. Surprise. I don't think they are the type of people that would ever use lottery.com. They just like getting it from their local retailer, whoever sells lottery tickets. Whenever we play lottery games at work from time to time, which is very rare, maybe like once a year when the Powerball jackpot reaches like 800 million or whatever, something crazy, everybody just gets it from the little bodega down the street. People aren't going to lottery.com. So maybe that changes, but right now, nobody I know uses lottery.com. So they have a lot of work to do, I think, and that's clear by this 0.2% market share, which is, basically nothing. And they've laid out their market cap, which we'll get to at 563 million. So it compares pretty well against these other high, market cap companies that have X% share of their market in a bigger market for lottery.com, but they have to grow this market share to grow this market cap. We'll see how they plan to do that. Clearly, international expansion is one way to do that, but also how do you make more return out of the US lottery.com players? So US lottery.com players cost them about $4 to acquire a customer. They get about $17 in annual user profit, average gross profit per new customer based on annualized November to December 2020 transactions. So they're looking at end of year November to kind of make this number. They got a 31% churn rate, which means that, does that mean that for every 4 people they acquire, 1 person leaves the platform altogether? Or for every 3 people they acquire, 1 person leaves the platform altogether after using it once, and then other people use it more. Hard to tell, but they've got a $55 customer lifetime value. International lottery players, similar acquisition costs, more profit, higher churn rate, but a higher customer lifetime value. So acquired lottery players are then introduced to higher margin products. So what else do they have? They've got a diverse suite of high margin products. So they have domestic lottery, charitable sweepstakes. Players donate to qualified causes and get entered to win luxury prizes and once-in-a-lifetime experiences. And they've got partners, business to business. A robust API platform enables partners to sell official tickets using our operations to fulfill the order. Partners provide their payment processing service fees applied to each transaction. So those are gross margins in the 17 to 33%. Based on end of year 2023 projections. Okay, so they're not what they're getting now, but what they're getting in 2023. So that's optimistic. Important to read these bottom areas here because that's a big difference between, hey, we're actually making these margins now versus we're going to make these margins in the future. And then they've got international lottery selling official U.S. lottery games. Is that legal to users internationally with each ticket containing a markup? I guess it's legal. And then same B2B partnerships with other partners selling U.S. lottery tickets using their operations. And then international games, their own designed and managed lottery games, draw an instant on the blockchain. Blockchain. And then subscriptions, including exclusive lottery pools, lottery prediction data, and other premium features, data sales, premier provider of global lottery data to over 200 publishers, including Google, Amazon, and USA Today, and charge a subscription fee. I don't know why they want lottery data, but apparently lottery.com has it and sells it to other partners. And these are high gross margin businesses as well as their own designed games. So that's an interesting part of the model. If they can convert people to buying lottery tickets via their platform, they can sell them other games. And that kind of makes me think, hey, are they getting into skills type games eventually? Skills being another company that kind of does betting online via, video games. Is this going to be something like that eventually? Or are they just sticking to really simple draw an instant, scratch off tickets that you can buy online, stuff like that? Are they going to get into sports gambling eventually? The answer is probably no on those two things. It's going to be simpler, lottery based games. But who knows, right? There's potential to expand when you're dealing with these high margin, high cash flow generating businesses, which this at least seems to be in the future, because once you get people hooked on a product, it's easy to sell them other things within the app. And if those other things generate a lot of margin and generate a lot of cash, you can expand into other things. So that's a long ways away, but who knows? So their business overview, 2020, their revenue seems to be very, very low. Comes mainly from business to customer. So basically selling tickets to people. So they're projected to be 1% of total market in current 11 states and expand into 20 new states by 2023. So they're projected to be 1% of total market by 2023, or are they at 1% currently? It's hard to tell. They're going to expand aggressively internationally and then introducing new games and subscription services. Business to business partnership, provider of data, and then mergers and acquisitions. They've identified 10 opportunities by 2023, and they're expanding to at least 8 new countries. So their starting point is very low. They plan to grow quite a lot. A lot of that growth is just expansion of current regions, US, Mexico, expansion of new regions, and then some of these business to business to data spaces. Partners and innovations. So they've got an affiliate program through a lot of these companies that drive traffic to Lottery.com's properties for a split of any proceeds. So they have access to 250 million users a month with its current affiliate partners. Great. Does anybody actually, whatever. It's a way of them to find users by sharing profit with their affiliates. I don't know if that's that great, but hopefully that drives user interest in the platform if you're an investor. API program, so they are allowing partners to leverage their licenses and operating capacity to sell lottery tickets through operating platforms. So they have access to over 420,000 points of sales and access to 22 countries with their current partners. Cool. And then data services, they mentioned that before, selling lottery data to Amazon, Google, USA Today, etc. They are innovators in blockchain. Win Together enables players to donate to qualified causes and get entered in sweepstakes to win luxury prizes and once-in-a-lifetime experiences. Rooted in blockchain, with 7% of all donations being distributed to all holders of the ERC20 token. Ooh, Ether. The platform will continue to grow, being a value driver to Lottery.com as it enables an additional game of chance able to be played in every state and almost every country. So let's check out wintogether.com. What are they doing here? Connection is not secure. Okay, didn't load anything. I just wintogether.org. Okay, is it .org? Is that what it says in the? Okay, it does say .org. So welcome to the Future of Philanthropy. The campaign to support Typhoon Trees initiatives and win a Tesla Cybertruck has come to an end. Okay, so this is kind of neat. You can win things, donate money to good causes. Lottery.com probably takes a small cut of the proceeds for making this happen. Very cool. And then blockchain, building a patented next generation blockchain platform specifically to address the challenges with online games of chance. So this is interesting. Blockchain's a huge thing right now. Seems like they're not quite there in terms of having their own blockchain platform, but they're working on it, which is great to see. Accepting crypto and fiat as payment methods to attract a global player base. Very cool. And then using that technology to generate new games and protect player identity, etc. And do that all on the blockchain will be interesting to see. And now we get to the profit. So I was hoping to kind of see more about how the company functions. So if we go to, let's say, Texas Lottery, right? Is there any mention of Lottery.com on the Texas Lottery webpage? And I'm assuming the answer is no, right? Because it seems to me like they're basically a retailer or a reseller of lottery tickets, and they have a deal um, with Texas and California, et cetera, that says, hey, we can sell lotto tickets for games of chance in your state. But this is basically no different than the gas station down the street having that same deal. It's just that lottery.com happens to do it online. And it probably doesn't prevent anybody else from saying, hey, we're going to create lottery.com texaslottery.com or something like that, where people can buy tickets online via another website. If I kind of look at the lottery.com website and go to the FAQ, how does lottery.com work? What happens if I have a winning ticket? So basically, a lottery.com employee will purchase tickets on your behalf, which you can then view in your app and protect them under stringent guidelines. Sleep well that knowing your tickets are 100% secure. Once the draw happens, we'll monitor your tickets and let you know if you're a winner. We also think that you should celebrate big wins when they happen. So for prizes up to $9.59, enjoy instant payouts to your account, which can be cashed out or used to buy more tickets. If you're a big winner, we'll help you through the entire claims and redemption process. Rest assured, a lottery.com representative has your back during the entire process, start to finish, and we hope it ends with a big win for you. Although we aren't yet live in all 45 states, we also act as a one-stop shop for all things lottery. View instant information about all your favorite state games, et cetera, et cetera, et cetera. So it seems like basically if you buy a ticket through lottery.com, someone on their end purchases a ticket for you in the state of question. They hold that ticket somewhere in a box, a lockbox, if you will. And if you win, they help you cash that ticket and give you the money. I think they just make some money off of the service fees that you pay when you buy a ticket. I don't know if a ticket through lottery.com is more expensive than a ticket at the retailer, possibly, because the retailer probably says, hey, I'll do this for free because you'll come in and you'll buy other stuff, whereas lottery.com says, hey, I might have to charge you a service fee for buying this thing online, just like how Instacart charges you a fee for deliveries and stuff like that. So it's interesting to see that this is how it works, that basically they buy a ticket for you, they hold it in storage, they help you redeem the money. It's interesting. It would be interesting to see how much physical labor this requires on their part. It's hard to tell. That's kind of what I was hoping to get an answer for through the investor presentation. And maybe it's an email I'll send to the CEO of the company if he'll answer, in that, hey, when you're expanding to all these states and you're suddenly getting 5% of the market share, buying all these tickets is going to have to be automated somehow. Is it already automated? Is the storage of these tickets a problem? Is it going to be hard to manage all of this if you expand to other states, if you expand internationally? Are there going to be risks of tickets being lost, of tickets being mismanaged, of employees not actually purchasing tickets, or of employees losing tickets, of whatever? Don't know. But it seems like the business model is very simple. You go online, you buy a ticket, somebody buys the ticket for you physically in California, for example. They store it, you win, they help you cash it, right? So that doesn't mean they have a deal with the California lottery to be an exclusive provider, that they can somehow, set up an online website on the California lottery website and help them manage everything. It means that they're doing their own thing on their own app, and other competitors could come in if this becomes a big deal. So kind of murky waters. I was hoping this presentation would be more telling in terms of what they're actually doing as a business. It's kind of, what's the word I'm looking for? Hazy in that regard. Like, what do you actually do here? And I guess the answer is it's pretty simple, that they buy tickets for you and store them and they help you win. But is there more to the business? Do they have actual deals with states? Are they just a retailer? It seems like they're just a retailer. So what prevents other companies from doing the same thing? I mean, I guess the answer is they have a first mover advantage and they have the lottery.com banner, which may be enough. But there's still a lot of questions I have here as an investor. And then if we look at some of this revenue, your starting point in 2020, which is a year where you would think you would think this type of business model would do well is 10 million bucks. They've been a company for 4 years. They started, with those 4 states, including Texas, which is a pretty big state, in 2016. And maybe Texas was a bit further down the line. Maybe it was added in 2019, whatever. But Texas, Minneapolis, Oregon, and New Hampshire had a full year of revenue. Some of these states had at least a partial year of revenue in 2020. And you're adding, it seems like this includes, and pro forma, yeah, so this includes the acquisitions, and you're at 10 million bucks. And then suddenly in 2021, you're at 71 million bucks. Well, what changed? And in 2022, you're at $279 million. And then in 2023, you're at five. So the growth is huge. You're 7x year one, you're like 4x year two, you're 2x, you're 50% up, you're 50% up. What's driving that growth? And I guess the answer is, they're acquiring and they're getting more market share. But what changes between 2020 and 2021 that allows them to get all that market share? Why hasn't this taken off already between 2016 and 2019, and especially in 2020, right? Where's the gap? Where's the revenue bridge here? And hopefully they have something in the presentation that says, hey, this is how we plan to go from 10 million to 71 million. And maybe this is how we plan to go from 71 million to 279 million. Because if this growth is real, then holy crap, what a company. But I'm assuming between 2016 and 2019, they went from 0 to 10 million. And then to go from 10 million to 71 million in 1 year when the growth has been very anemic is very optimistic. And then from there to go from 71 to 279, it's very optimistic. And potentially there is going to be a huge shift towards purchasing lottery tickets online soon. But what's driving that shift, I don't know what the answer to that is. The good thing is, even though they're at 10 million here, their EBITDA isn't a massive cash burn, so it's only 2 million negative. They're going to start being cash flow positive if they can grow their revenue, or EBITDA positive, which is a decent proxy for cash flow, starting in 2021. So there's potential investment that they can make to grow this revenue just using the cash from the business starting in 2021, if this growth is real, right? Because this is going to be a pretty decently a pretty decent margin business rather. Selling tickets online doesn't take a ton, except, you got to hire people to actually go to the computer, key in your numbers and print out your ticket and put it in a little block box for you. That's their business model apparently. But the numbers look fantastic. If you kind of look back to that initial slide that said like, we're valuing this thing at 560 million. That's 1x 2023 revenue. If this growth is real, wow, that's a deal. But the reality is that it's 560 million divided by 10. Right now it's 56 price over sales in real revenue, the revenue that you can see, right? Now DraftKings, I think, is like 37 price over sales right now. So, if they can actually achieve these numbers, then hey, 71 million times, let's say 30, I'll give it a slightly lower multiplier than DraftKings. You're talking about a $2 billion company at that point. If the growth actually starts to materialize, the return potential here is astronomical, I think. But the reality is, how real are these numbers? Whenever you look at SPAC presentations, it's like, sure, you're going to start making revenue by 2025 and it's going to be huge. These guys are at least making revenue already, but can they grow it at this pace? Between 2016 and 2020, they grew it from 0 to 10 million, and then suddenly they were going to take 10 million to over $1 billion in that same time frame. It's hard to believe, but the addressable market's certainly there. Online lottery sales in 2020, they're 21 billion. And I don't know if those are mostly in the United States or outside of the United States. The expectation is that it more than doubles by 2025. The addressable market also grows by quite a bit. And then, hey, by 2025, what is their percentage of the addressable market? Even with that 1 billion in revenue, they're still only a fraction of that addressable market. So really, they're sort of saying that, hey, we're gonna grow, but part of that growth is driven by the expansion of lottery sales, and part of their growth is probably driven by the expansion of the actual addressable market. But if by 2025 they're representing 0.17 of the addressable market, and they're currently representing, or was this meant to be by 2025 as well here? Oh, this is 0.02. Okay, so they've grown it quite a bit. They went from 0.02 to 0.17. Got it. So it's a combination of expanding global addressable market, expanding online lottery, and expanding presence of lottery.com from 2 basis points to 17 basis points. So quite a bit of growth there, but it's still a very small percentage of the overall addressable market. But you can kind of see where the thesis comes in here. Like, they have this idea that, hey, we're going to move lottery sales online. The market's massive worldwide. We're going to be the first mover. Right now, we have almost none of the market. Our revenue sucks. But if we can start capturing very slow incremental percentages, or not even percentages, sub 1% of that market, we're going to grow revenue at a pretty decent clip as that market grows, and the online expenditures within that market also grows. And that's a reasonable take. They're not saying that we're going to be 10% of the market. We're going to be less than 1% of the market, and we're still going to be generating quite a bit of revenue and quite a bit of money. So the idea here is sound. The question is, can they actually do that? Right now, nobody seems to be going to lottery.com. They had 7 million visitors. They got 10 million in revenue. That's not a lot of revenue. How can they get more visitors? Obviously, they're potentially acquiring other companies. They're growing internationally. Is the bridge between 10 million and 71 million, is a lot of that international growth, is a lot of that expansion of current markets, moving into better markets than, are some of these 2021 markets high lottery spend markets, whether it's Ohio, whether it's Arkansas, New Jersey, New York. Do they think they can have an uptick? Because the question is an apt one. And the reality is that if they can hit 71 million in 2021, then this stock is probably a good investment today, assuming the market cap of 560 million or whatever it was. If they can hit 279 in 2022, the stock's a great investment. If they can hit all of these numbers, the stock is an amazing deal. The question is, how? How do they do this? Because this is their starting point. This is their starting point. And yeah, their growth is amazing, but that's another question mark. Like, how are they doing this? All these other companies, yeah, they're starting at a higher point, but how do you manage 300% growth for 3 years in a row? That's very optimistic. And it doesn't show anywhere. Like, where's the revenue bridge between 21 and 22? I've seen those in other presentations. Be more open with your investors is what being more open with your investors is what I'd like to see. It seems like there's a lot behind the curtain that I'm not seeing within this company. 300% growth, holy crap, amazing. But how? Right? Tell us how you're planning to do that. Yeah, the evaluation is very attractive based on 2023 profit. It's amazing based on 2023 EV and revenue valuations. But you have to get there first. How do you get there? And again, we're coming back to that 526 enterprise value. So what's the deal look like essentially? So you got 63 million in cash, 438 million in shares to lottery.com, whatever, 62 million in sponsor equity. Seems high. So essentially half of the money goes to the sponsor. There's no pipe here. Nobody seemed to be interested in investing beyond the trust for some reason, which is interesting. The valuation at 1096, I don't know why they used the 1096 share price. Assuming no redemption, is about 563 million plus 8 million in debt minus 45 million in cash. So you're talking about 526 million in EV. Uses, 45 million of that go to cash. Seems like this is high. The sponsor's taking 11% of the company, and the public shareholders are taking 11% of the company. Seems kind of iffy to me. So this is based on 51.4 million in shares, 1, 2, 3, 4, assumes no redemptions. Sponsor agreed to cancel 561,000 shares, excludes 3 million seller earnout. God, these numbers are so small, it's so hard to see. Released at $13 before 21, 3 million seller earnout, released at $15 before 22, $16, I think, before 22. So at least there's some targets, price targets for this dilution. Excludes 2 million SPAC sponsor earnout, released at 13, and 2 million SPAC sponsor earnout, released at 16 before 22. Does not include 21 million in warrants. That's a lot of dilution. Exercisable at 11.50, and does not include 1.75 million unit purchase options exercisable at $12 per unit expected to be outstanding. So there's gonna be a lot of dilution here. You're talking about 3, 6, 8, 10, 12-ish, 20, so like 30 plus million in shares from the 51 you have here. So you're talking about 40% in share dilution potentially. Now the good thing is there's some price targets here, but it's 13 and 16, so they're probably not too difficult to reach. And 11.50 for the warrants. I mean, that's kind of what happens when you've got these early 2018 SPACs that had one warrant per unit instead of 1/5 or 1/4 that is more common now. There's more. That's good for people who purchased units. It's not super great for people who are purchasing shares today. So at today's prices, so this assumes a share price of 10.96. I wonder if that is accounting for some of the redemptions they had since they launched at $10. Today this sucker is trading at 12.94 before market opens. It's down a bit pre-market. Good old SPACs. So you're talking about a slightly higher EV, but you're still looking at very attractive valuations based on 2023 revenue. If you look at DraftKings being traded at 37 today, probably closer to the 13, 14 in 2023 based on revenue. If this thing actually grows how it's growing, and you can take that to a 13 multiplier, you're looking at a 13x return, right, on your money. And that's not unrealistic if these numbers are true. It just, to me, it feels like these numbers are so optimistic that you can't, it's hard to trust them without more information. And there's not a lot of openness within this presentation. It just seems like it's very, it's very base level. They don't tell you enough about their business model, how it works, how it functions. They don't tell you enough how they plan to bridge the gap between 10 million to 71 million to 279 million. There's a lot of question marks. Yeah, there's cool things like Win Together, and there's blockchain technology that may just be enough to give this a bump when we're launching the blockchain on our platform. Come see it. It's like, hey, 20% bump because it's the blockchain. Hey, we're actually acquiring this other company. We're expanding to new game types, etc. Because now they are, they're not burning a lot of cash, and 45 million in cash, or 37 without debt, can go a long way for some of these companies that are currently earning $1 million in revenue, like these two companies they got that are Mexico/Latin America based. But what else are they going to do? How do they expand these markets that basically have no uptick? They're already in 10, 11 states in 2020, in a year where people were staying at home and probably not going to gas stations to buy a lot of lottery tickets, and yet somehow they only garnered 10 million in revenue, right? How did they take that and turn it into 71 million in 2021? Now, obviously, they probably have an okay idea of what's going on in 21 already, so maybe they're optimistic about that number being realistic, which is very good if they can hit that number. But then how do you get from 71 to 279? It's all expanding people into the lottery.com universe, but how do you do that? Like, I don't use lottery.com. I know my parents would never use lottery.com. They just wouldn't, and I don't know if young techie people are all that into lotteries. Maybe they are, maybe I'm wrong, but this assumes a decent uptake of online spending for lottery games and games of chance. and some of that uptick going directly to lottery.com, because there's going to be competitors. If this market turns out to be real and more people move into lottery-based games online, there's going to be competitors. And yeah, lottery.com has the the website and they have the first mover advantage. But is that enough? And maybe it is. This is an interesting bet, but to me, this is all this is. Like, I don't get enough out of this presentation that makes me feel like, holy crap, this is an amazing company that I want to go all in on. But I get some out of this presentation that says, there's potential here, but this could all be bullshit because there's not enough transparency within the presentation to make me feel good about investing in this in a big way. And like I said, I have warrants here, and I probably hold the warrants because if this thing actually materializes in this growth profile that they're saying and showing here, then this is going to be an awesome investment. And I can see it happening, right? I can see people going to lottery.com and buying tickets instead of going to the gas station. But I don't know if it will, right? And that's obviously the case with any stock. But here, it's just such a question mark that I'm not comfortable throwing more than a small percentage of my SPAC money at it. And probably in the form of warrants because there's more upside there. If this thing blows up, because this thing is either going to go two ways. It's going to go to $2 if their 2021 revenue comes in at like 17 million, or it's going to go to like $100 if by 2022 they're at 279 million. They're actually producing cash flow and acquiring companies and doing something with the blockchain and really doing well. And to me, that trade-off is pretty good, right? And maybe I'll buy some common shares if it keeps dropping, because if the downside is a loss of $8 on each share, but the upside is a gain of $100 on each share, that's not a bad trade-off. But I think that's the kind of trade-off you're making here. This is a pretty big moonshot that is very dependent on their projections coming true, and that's always the case with SPACs. But I had this is the first SPAC I've seen where the projections are so ridiculously high that it makes it very difficult to believe. Like most SPACs have projections that are difficult to believe, but here it's just very difficult to believe. Like you've been in business for 4 years and you've garnered 10 million in revenue, including an acquisition you just got that probably has like 20% of that, and suddenly you're going to go to 70 million in the next 12 months. How the hell are you doing that? And how the hell are you going from 70 million to 300 million almost in the next year? Because obviously the uptick in lottery.com usage isn't that huge right now. So what's going to change? Tell me what's going to change. And this presentation doesn't do that. It just says, look at these numbers. They're very good. Look at this addressable market. It's very high. Look at how little we have of it. It's very low. We can have more. Look at our growth rate against everybody else. It's so huge. Look at this graph. It's so much higher than the others. And when I see stuff like that, it just throws off bullshit detectors to me. And, that's not something that I'm willing to invest a ton of money in, but it's something that, hey, if these valuations are true and I can put $1,000 or $2,000 or $3,000 into it, if it blows up on me, it's like, whatever, I kind of saw it coming. But if it explodes and suddenly my 3,000 is 50 grand, I'm like, hey, good job, guys. Good job, lottery.com. You guys executed on this growth path. You are a $500 million market cap company today that is 5 years from now generating $1 billion plus in revenue and growing and generating a ton of cash flow and acquiring companies and introducing new games and doing great. And it seems like a deal of the lifetime if this happens. But whenever something seems that way, your BS detectors should go off and you should say, how are they doing this? And an investor presentation is meant to kind of tell you this is how we're doing it. This doesn't tell me that. It just says these numbers are high. So for me, this is a small risk bet, nothing more. And I think I outlined why, but if you disagree, let me know. And if you love this company for reasons beyond what is shown in the presentation, let me know. If you know more about this company than I do based on this presentation, let me know in the comments. I'm willing to learn. And if there's more to the story that'll make me invest more, hey, maybe I will. But for now, I'm just going to hold my warrants, maybe buy some common shares if it drops a bit more with the SPAC disaster that's happening right now. But let me know what you guys think. And thanks for watching. We'll see what happens to lottery.com. This is one I'll be watching with great interest. This might be one of those stories that says, look at how amazing SPACs were. Or it could be one of those stories that says in the future, look at how much of a scam SPACs were based on these projections. If this turns out to be this, instead of this, then, the story will be a lot different than if it turns out to be this. And it'll be interesting to see. So thanks for watching. Let me know what you think. As always, please talk to a qualified financial advisor before making any investment decisions. I'm just having this for fun. I'm just doing this for fun. And I'll do more of these in the future. Let me know if you want any specific ones reviewed. Otherwise, have a great rest of your day, and I'll see you soon.